Cool beans, cool beans. Welcome, everybody. Welcome to the beginning of the week, fundamental and technical analysis. I'm going to be brief with the beginning of the week technical analysis because my pre-week analysis is still on the table. And then I'm going to pass it over to Carmen so she can wrap up the first half of the year and take us into Q3 and share her thoughts and her oversight with us on what's to come in the economy fundamental wise. So, with that being said, I'm gonna go ahead and jump into this quick overview of the pre-week analysis. So I told you guys yesterday in the pre-week analysis that if the dollar did not get back below consequent encroachment of this daily fair value gap here, that I expected us to run up to these monthly premium PD array levels, right? And so we can see today that we did not break or close below consequent encroachment, right? Today was a bullish day on the dollar index. We closed above that upper level of that fair value gap. So I expect the dollar to keep running up towards these premium monthly PD array levels, and then we will see what kind of reaction we get off of those levels. Um, we don't have any high impacting news for Tuesday, so we can see a pullback down to the top. I would like to see us pull back down to the top and respect the top of that daily fair value gap and continue higher. Cool beans. Cool beans. Looking at currency, same thing. Um, I told you guys that I wanted to see us pull back up into Friday's premium PD array levels, but same as with the dollar, I told you guys if we couldn't break and close back above the consequent encroachment of this fair value gap, that I expected Euro USD to run lower down to these monthly PD array levels, and we got that move today. I'm interested to see how price plays out throughout the rest of Asian and going into London markets, whether we dig through those monthly PD array levels or whether we respect them and start to pull back up, right? If we get back above consequent encroachment, I expect us to pull back up into those daily PD array levels. Cool beans, cool beans. But if the dollar keeps pumping to the upside, right, then of course we expect Euro USD to dig through these monthly PD array levels and possibly come down and run the monthly sell side liquidity. And then we'll see how price reacts to those levels. Cool beans, cool beans. And that's across the board with GBP USD and NZD USD, right? Cool beans, cool beans. And if you need more reference, just go to the pre-week analysis. Last but not least, futures, I told you guys, if we did not break below this upper level in consequent encroachment, that I expected us to continue higher to make new all-time highs. We didn't get that for ES. We did have a bullish day and a bullish close for ES, so I do expect ES today and going into Wednesday maybe to run the all-time high and create a new all-time high. However, we did get that for well, we didn't get it for NQ today. We got real close to running that all-time high from Friday. But we did have a bullish close for NQ today. And I do want to see us respect this bearish candle, right? Don't want to see price break and close below this bearish candle. I want to see us find some support on top of the opening of this bearish candle from Friday um price action, right? This daily candle from Friday. Want to see us find support on the top of that and continue higher to run the all-time high and set a new all-time high. However, if we break below Friday's candle, then I expect us to pull on back down into the, and I do expect us to get back down into these levels for NQ and ES. But I'm expecting that towards the end of the week with the high impacting news that we have coming out Wednesday, Thursday, and Friday. So with that being said, that will conclude the brief beginning of the week technical analysis. At this time, I pass it over to Corman so she can give us that saucy. It's all yours, Corman. Give me 1 second. All right, it's all yours, Corman.
Cool. Okay. So, man, to be honest, I don't remember the last Zoom call I had with you guys. I'm pretty sure Trump was doing something Trumpish and Biden was sitting somewhere in the corner trying not to fall. Uh, the same still rings true. However, man, things are interesting. I'll just say that. I'm going to pull up my screen so you guys can see what I'm looking at. Um, so while it's loading up, the screen you'll see it should be the World Economic Forum screen. Um, I always tell you guys, and I will forever tell you guys that if you have any questions about what will happen in the next week to 5 years, this is the place to come look. They will literally tell you everything that you need to know. Um, so periodically I've been scrolling through here, um, just seeing how things have changed, if things have changed. Yeah, a lot of things now that you see, when you scroll through here compared to the last time we actually looked at it as a group is very, very heavy. And when I say heavy, I mean very heavy on tech. Um, Tech was heavy before, but as you scroll through here and you start looking at the things that they're talking about, um, they're talking about like I think this might be the tech section, so hold on. No, this is just videos. Um, so their first three videos are actually focusing on um the future of advanced technology. So, the reason why that right now is so important is because we have this whole conversation going on about jobs, about income, how people are going to be able to survive. Are people going back to work? Are jobs actually creating the same types of jobs that they were creating before? And the answer is no. Um, Companies have been very strategic about how they're going to implement technology. So there are some companies that have said, Walmart, I'll just go ahead and name them, that they are going to take away self-checkout. There's a lot of Walmart locations now, they've taken it away or they've charged people. So Walmart Plus, for some people in some areas, is actually the way that you would check out because it kind of gives them more of a direct link to um who you are, just in case they see you try to, go through the self checkout or whatever, you don't scan something, they're just going to charge you for it. However, what a lot of people don't realize is that if you actually go to the Walmart flagship headquartered store in Arkansas, you'll actually see the technology that Walmart really wants to put out there is very, very, very similar to what Kroger is doing and what Amazon is doing. And that is when you go into the store, you get a cart, you get a basket, right? You walk through some Walmarts have those little silver opening door things. You walk through there, it recognizes you. It recognizes that you have a basket. Actually, at Amazon, you actually scan your barcode. If you've ever been like to Whole Foods, and you've had to scan your QR code to check out or to have it recognize you for your account, same deal. You scan your phone, you go through and shop. Guess what? Whatever you put in your basket, whatever you put in your cart, it knows what it is, it's priced it can weigh it in terms of Kroger because their carts actually have a weighing section. You weigh it, you bag it, you keep going. And when you're done, you walk out of the store. Same technology. If you've been to Sam's Club, you can shop, scan, and walk out. Granted, there's someone standing at the door to verify the items that you have, but it's a very similar technology to all of these companies, and it's kind of smashed into one. The only advantage right now that Amazon has over what Walmart is trying to catch up to them and doing is that they have robots that will restock shelves for their Amazon stores. So they're sensors. These sensors know when items are low. It knows exactly how many are on the shelf. It knows who picked up that item because you scanned your QR code, remember? So it knows who picked it up. It knows how many you picked up. And it knows how many are supposed to be on the shelf because guess what? It stocked the shelf. So it knows. And so there should not be a discrepancy between how many are on the shelf and how many have been sold. So that is what we're going to. So when everyone's like, yay, we're getting rid of self checkouts, okay, they're cool with it. Because guess what? You're about to be checking out on your own anyway. That's where technology is going. Japan has shown us that fast food can be done without people. You can go into a McDonald's right now, somewhere in Tokyo, and guess what? Probably won't see a person. Only time you'll see a person is just for giggles and customer service. Let me put a smile on some people's faces. And then also, let's have a person here so that just in case something doesn't work right, we can get them to fix it. That's it. So when we talk about technology, that's where technology is going. Like literally, this has all happened with Walmart since the beginning of the year. Um, they have had the controversy of charging people for the self checkouts, have switched over to trying to use the carts very similar to Kroger, all in this same time frame because they're trying to figure out what's going to work for them. They know that's the best option, but you have to, for the sake of psychology and how people think, if you want to do something new, do it one time. Get people to vent about it, whether it's good or bad, get them to vent about it, pull it back, then do it again. But when you do it again, you're less likely to get the same type of reaction from people because they've seen it one time. They feel like it's always been there, but it hasn't. You actually took it away. So they just automatically become desensitized when they shouldn't be. And that is actually, if you guys have seen or have heard about the lawsuit where they're trying to get TikTok banned in the US, that's actually part of the reason why, because short videos over time desensitize you to certain things. So, from a psychological standpoint, it's actually damaging because you can put something in someone's face, they can be outraged about it, take it away like completely, put it back in their face, and they feel like it was still there the whole time when it really wasn't. So, as you scroll through, you'll start to see some of those same narratives about technology. Another thing that you'll actually start to see a lot is about the dollar. I'm really going to focus now on that and then transition to the calendar. So, if you don't have the World Economic Forum pulled up and have it saved as a tab, either A, save it as a tab or pull it up periodically so that you can look at it. Um, Fed data. The reason why I have this pulled up, I normally keep the Fed's website pulled up for one reason or another, but they do have data on here where you can actually go through and look at consumer credit. You can go through and look at all the things that we have actually talked about before. if you ever have a question about something that you see on the news and you just really want to figure out, like, okay, what does the data really look like? You can go through, you can pull it up. Things like consumer credit, for instance. Um, I don't actually like this way. The graph form, sorry. I like charts. So I'm more of a chart person. Charts are just easier to read. You can pull it up and just see it. Um, but you can actually go through here. You can look at consumer credit. You can find out from this how much debt, how much consumer credit are people using, how much revolving, not versus non-revolving. Um, and I also pulled up M1 and M2 money supplies. So M1 money supply is going to be that um, very readily available money. So when we talk about the Fed going in looking at checking accounts to see how much money's in a checking account versus a savings account versus bonds, that sort of thing, this is what we're looking at. So the M1, you could call this, and it's dumbing it down a lot when I say this. So this isn't it in its entirety, but it's you could say checking accounts. It's very liquid. You can go, you can pull from it, take from it as you want. So when I look at this, I see you have this really huge peak here. So you have to think about what actually happened during this time frame. There was a lot of stimulating stuff, just put it like that, going on in the economy. So it was PPP loans, it was stimulus checks, it was, certain groups getting double or extra benefits. So there was a lot of money that people were getting. And most people, when they have money coming from the government, whether you're on assistance or whether you are getting the money from IRS, from a tax return or whatever, it goes to a checking account for most people. That's why you're seeing it look like this. Now, you see it level off. So people started, so there are some dips in here. So this is like by the month. But each month, like you can kind of look in there and see that there are some dips. You can break this down by region and look at the regions also. But now you can see people are actually starting to spend that money and we're starting to plateau. Now, the other thing you can do is you can correlate this with consumer credit, the chart I just had up, and you can also correlate this with mortgages. What will you see? And I'm laughing because this is one thing they don't like. People are like, listen, I got all this debt. Oh, I'm paying down debt. So when you see this money come out of checking, this money is not just free flow spending. Some of it is, and you can correlate that with just people spending money. But when you overlay charts, and you can't really do it here, I think you can do it on Trading View. I just normally print them out and I just like lay them on top of each other and put it up to glass or a light and just trace through them. I'm just do it the old fashioned way. But you can actually see that people have been paying down debt. People don't want to hold on to debt. They realize, and people are starting to recognize that, hey, interest rates are high. My credit card company just jacked up my interest rate 8% and didn't even tell me, or legally, they have to tell you, but it's in super fine print and they don't have to make it super in your face to show you or tell you, hey, we're jacking up your rate. So people are like, man, I thought I was paying down my credit card, but I just got smacked with $200 in interest or whatever based on whatever your credit is that you're rolling over. People don't want to do that. People don't want to hold on to mortgages for a really long time. So people are starting to pay off debt. Also, this is a little bit sad, but you start to see some correlation here with M2 money. M2, let's just call this assets. You can call this savings, but it's a basket of things. It's bonds, it's treasuries, it's all of that stuff together, money market accounts and everything. There was also a dip there too. However, the dip wasn't as dramatic. For one, you could possibly say, well, people don't keep quite as much money in their savings account, but it's the fact that people had to tap when you have this much of an increase. So people, in addition to putting money in their checking accounts, had money they put aside in their savings. So people were trying to save. But you do see a slight dip here. This could be a couple of things. It could really be people needing to take that money and use it towards bills, that sort of thing. But from what I've seen and from the way that money has kind of flowed around, my thoughts are that this money is coming out more so for people to pay debt. Because when you look at an interest rate for a credit card and you look at the interest rate that you're getting on money that's sitting in your account, yes, 4 and 5% sounds enticing. Yes, you would be, pressed to put your money there. And I feel like that's the reason why we did have this slight little bump up, because interest rates did start going up for these types of accounts. But to pay down debt, it feels a lot better. It's more valuable because then you can actually use your money and use it towards something later on that you really, really want to use it towards. So, with that being said, I'll come back to that in a second. That's more of like just regular financial news. It's some stuff I'll probably sum up here. So with the Forex Factory calendar, we've had a lot of stuff happen since I haven't been here. We've had interest rate changes. We've had a couple of Fed meetings. We've had, oh man, a lot of stuff. I'll just say it that way. I'm just skipping tomorrow for a second because I want to come down here to Wednesday. Wednesday, I just told you about the Fed. We have M2 money supply coming out for China, but I probably shouldn't have skipped tomorrow for a second. No, it's not there. Okay. So China's M2 money supply, that's coming out. That's important because we're going to talk about BRICS when I'm done. But for the US, our consumer price index news is coming out on Wednesday. We have Fed news coming out on Wednesday. Australia has news, and then Canada has news also. This news that's coming out is going to be super important because this is what's going to help to lead us into the election. Everyone has been talking about Trump and has been talking about Biden, but people forget about the background players in all of this and who the people tend to blame the administration, but it's really these background players, aka the Fed, who have and hold the puppet string, so to say, to control things that people see on a day-to-day basis, and then they turn around and blame administration. So a good setup for Biden with the Fed would be to have the effective rate. So the effective rate would be the rate that you see when it comes to your checking accounts and stuff. You want to see that plateau or it go up, but then you also want interest rates to slightly lower. Staying the same might be okay, but I think we might get one more Fed meeting that they could squeeze in before the election. But when you start cutting it super close, people are tied up into the politics and they forget about these things. The economic projections are important because it's not just now that they're going to talk about, it's going to be years. These projections, they can go up to 5 years. So we really want to see where the Fed thinks we're going to be, not only for the rest of this year, next year, but out through at least 2027. Hopefully we can get a projection out that far, then get a statement, hear a little bit about the budget, and then hear some of the questions and answers that we get during the press conference. I can't stress enough how important this Fed meeting is going to be, because during an election year, it can take one little thing to move people. And it's not just that individuals are going to look at this and have an opinion and then possibly keep or change a vote. It's that, you know, people who just retired, people who just graduated, people who have these 401ks, retirement accounts in general, investment accounts in general, that they're trying to build, when they start looking at the market and they're like, why is the market moving like this? And then you start looking at news and you start hearing stuff about interest rates or about what administration is or isn't doing, that fires people up, because you're messing not only with their money that they just earned and put in these accounts, but you're also messing with their future. And I feel like a lot of people now are starting to become more aware. Um, as much as people hate TikTok, that's one thing that's kind of good about it, is that it puts a lot of things in people's faces. And so it makes you more aware of certain things. Now, the oof. Now, how legitimate the news is, how, real the sources are, you really have to pick and choose who you listen to and who you follow on TikTok. But at the same time, the fact that it sounds bad, but the fact that people are even making videos about it, I mean, it just brings awareness to the topic. So with that being said, make sure you fact check people if you decide to take your news from TikTok. Um, then the rest of this week, in my opinion, there's nothing that can really top a Fed meeting, especially this one, for the rest of the week. And there really isn't anything except for consumer sentiment and inflation expectations, because we are on this mission now to stabilize and drop inflation. Because the goal is we're in an election year. You have a current president who has the potential to have another term. So he wants the economy to look amazing and the best it could possibly look. You have the Fed, who's supposed to be neutral in the situation. However, at the same time, they know that, they have to make the economy look good, because they have dealings with the Treasury and how all of that works on the back end. So they're going to try to make the economy look as best as possible without being super drastic and dramatic with it. But don't expect, if they do change a lot of things, don't expect it to last through the first quarter of next year. Summer at the latest. I say that because it's happened every time. And there's always been something that happens in the third or fourth quarter of the year, especially like right after the election, that could possibly change how the first quarter of the next year is going to look. It would not surprise me. Now, moving on to BRICS, I told you guys I was going to talk about BRICS because of this China M2 money supply news. It would not surprise me if some breaking news came out at the end of the year or at the beginning of the year that says that China and India, Russia, Iran, South Africa, decide that they want to pull all trading out of the US dollar. It wouldn't surprise me, because individually between those countries, some of them have already actually started doing that. So they don't trade in the US dollar anymore. They trade in their own currencies, and they do their own settlements, because remember, settlements changed last month. So when settlements changed, It's like, hey, we can start doing things on our own and money clears faster. So, we're good. It also would not surprise me if at the end of this year, um, the dollar just started to slide a little bit more. On the back end of things, you can see the dollar sliding. Um, on the Forex side of things, I know when you look at a chart and you're like, man, the dollar's pumping. What is she talking about? No, dollar's not pumping. Um, on the back end, okay, how can I make this simple? That Zoom call that I had where I explained to you guys about settlement times and how things clear and why they're like important times to Forex and trading and stuff. During that call, I was talking to you guys about how the Fed actually goes in and like kind of puts money into the system. It's like that. But on the back end of things, you can feed corporations, you can feed banks money. You can say to a bank, hey, if you write out this many loans, we'll give you this much money. So money still gets put into the system. It's just not going directly to the consumer. So it's going to make the dollar look amazing, like super amazing. But on the global front, when you start to look at the value of a dollar versus inflation versus how many people are actually using the dollar versus how many people are saving it and using it as a store of value, it's starting to lose its luster. It's starting to lose its value with a lot of people. So would not surprise me if we saw that. And then crypto is something that we can, fingers crossed, talk about on Wednesday, because that's also going to be another key factor into why the dollar slide continues to happen. And remember, whenever, let's see, we have 5 minutes. Let me see if I can do this really quick. I'll talk while I do it though. Can't remember what it's called. My gosh. So whenever they came out with the COVID bill, I'm just gonna have to search it like this. Remember, everyone got a digital wallet from the Treasury at that time. Um, I have to find it again and just put it in the chat for you guys. But you can find it here, like the whole thing. And it's like on page 700 and something, like 726 or something like that. But everybody has a digital wallet already. Like they're already prepping for this moment. Um, so don't be surprised if your bank is like, hey, we're going to transition your money into this type of account. It's still a checking account, but you can now use it like crypto. You get like an address and you get a wallet and all this kind of stuff. Um, don't be surprised. It's just going to be a part of this whole transition where BRICS is becoming a lot stronger and the US is now going to have to find a way to get itself out of the corner. You hear the Fed talk a lot more about gold. China and all of the countries that are part of BRICS have been stockpiling gold, if not have their own supply where they can mine gold. The US doesn't like that, and the US has to find a way to still remain competitive, and it's going to be very, very hard. As much as I love, to hear people talk about how amazing America is and how great things are, capping immigrants coming into the country at 2,500 a day, that sounds crazy, doesn't it? When we had millions, I mean, comparatively speaking, it's not that bad, but um that affects the value of the dollar. I mean, I know people don't like to hear those kinds of conversations, but you know, it's a tax to the system. And we can talk about that on Wednesday because New York is struggling. When you have states out there that are struggling and they're going to possibly go bankrupt because they can't take care of immigrants and their own citizens too at the same time, yeah, we have problems. We have a lot of problems. And other countries know it, they see it, and It's like, why not, while they can, flood our country with their citizens to make money under the table because they don't have papers, and send the money back, but send the money back in their currency. That's like, I'll just have to show you visually with a graph or a chart or something how that bankrupts the US system. And countries know this and they love it. And right now we're just like a trampoline for everyone to just bounce off of and enjoy and love and then break and then they're on to something else. Um, anyway, that's all I have for right now. I have a lot more, but I'm not going to talk your ear off tonight. I'll just continue on Wednesday.
Cool beans. There you have it. So sad as always, we appreciate that sauce. Ladies and gentlemen, that will conclude the beginning of the week technical and fundamental analysis. If you haven't looked into dog coin, you should look into dog coin. Again, this is not financial advice. You know, I had to get that disclaimer. Anything that we share during this analysis is for educational purposes only. But you need to look into Dogecoin. Um, look into Dogecoin. Set up your CoinW account. Buy you some USDT. Send it to CoinW. Trade your CoinW for, trade your USDT for Dog and just hodl it. Just hold it. We're gonna be holding until December, going into the beginning of the year, and you won't regret that you did so. So if you haven't got any dog, if you have any or anything, any vice or bad habit or anything that you could sacrifice, you know, and take that money and put into dog, I recommend you doing it. But again, this is not financial advice. As always, I appreciate you guys coming out tonight, tuning in, getting this knowledge and empowering yourselves. Let your family and friends know you love them while they still here, please. And as always, peace and love, everybody. You know.